Hello, this is Richard C. Wilson of the Family Office Club. I'm here today with Samir. Welcome, Samir.
Hi, Richard. How are you today?
Great, great. And we're doing a investor mandate interview today with Samir. So, Samir, what type of an investor are you?
So we cross we span the category between we do some venture investing and we do some long dated, more like private equity investing. It's an interesting mix, which is that so in short, because of the area that we're in, which is primarily electric vehicles, electrification, sustainability, those kind of areas. By nature, by its nature, because it's still an evolving industry, what we find is that there's a lot of great new technology, great new R&D, which can be applied into existing projects like real estate projects or other existing situations. And what that allows us to do is combine both the venture aspect as well as kind of more something similar to a commercial real estate investment, right? So that's so it's sort of a hybrid model. That helps.
Right. Sure. And what type of geographical locations for investing are you looking at, and how much revenue does a company need to have before they get your interest, et cetera?
Sure. So we look at the US, we look at Canada and Western Europe. And the companies we've looked at are of different sizes. Some of the smallest ones, we've seen revenues of, let's say, 500K upwards. And it depends at which stage we're helping them with, right? So some of the companies we work with, or some of the investments we work with, are very large, but say, 10 to 20 million plus in EBITDA, for instance. But typically in that case, we're helping them to scale or grow in a new market. So as an example of, so I'll give you two examples, right? I'll give you an example of the small end, and then I'll give you an example of the larger type of investment. At the small end, for instance, there's a microgrid company that we like in Toronto right now that has a new technology that basically creates a new kind of sustainable sort of electric grid for companies or for community developments. So they're kind of at the lower end, and what they're looking for is a combination of venture capital, working capital, and then project financing to kind of put their technology into, for instance, real estate developments, right?
Sure.
At the high end, then there's a large battery company which has investors out of Vegas and then out of China. And what they're looking to do is to expand the use of their technology into new markets, such as, let's say, commercial vehicle fleets, right? So let's say Amazon Prime. If you see all those kind of vehicles driving around your neighborhood, right now they're still gasoline and diesel vehicles, but one of the things that, say, Amazon or UPS are investing in is transitioning a lot of those vehicles over to electric vehicles because it's cheaper and less polluting and so on. So that's an example of where you have large companies, but which are kind of trying to emerge and come together in a new market, which is an example of one of our larger investments.
Sure. Okay, makes sense. Yeah, we've got a lot of seems like there's a lot of investment activity in that area. I know we've had a venture capital investor on here recently that has a battery related technology they're growing. We also had a Family Office Club member with a energy efficiency device for commercial real estate properties. I've met in person with 3 times. And then one of the investors we interviewed, who's out of Europe and living in the US now, has an electric motorcycle investment that he's gone into, along with a dentist investor that I know. So it seems like just in the last couple of months, there's been a lot of, relations to that within the Family Office Club that I've been hearing about. So there must be a lot of activity going on a broad basis there. What would be your number one piece of advice for an investor listening who wants to invest in companies like the ones you're looking at that maybe you wish you knew a decade ago or 15 years ago that you could share now with an investor listening to this recording?
Sure. So one piece of advice is that the space we're in is it's a technically complex space, right? So this whole what makes it interesting and exciting is that it has the potential to change the world, right? So the kind of vehicles we'll be driving, the kind of, the kind of homes we'll be living in 10 years from now are going to be very different to the ones we live in now. They'll be better. There's a lot of great, exciting new stuff. However, what that means is there's a whole lot of science and deep kind of technical complexity behind it. So for many investors who aren't familiar with that kind of complexity, either they need to get the right kind of advisor who can help them with that, a trusted advisor. In our case, for instance, that's the function that we perform. So my background is I'm an electrical engineer. My dad was an electrical engineer. He used to take me around power stations as a kid. It's what you do, right? The first grader.
Yeah.
And then I went to business school, did the whole finance thing, worked in the oil industry and investment banking. So that range of skills that I picked up, or the experiences I picked up during that time, help the way I look at these investments. I look at it both from the financial it has to make sense, and
right.
What makes sense depends on the kind of investor, right? If you have a venture cap, if you have VC kind of investor, they expect a very different return profile to a private equity type investor who's looking for EBITDA and looking for a very stable, predictable return over a period of time.
Right.
So there's some of the financial aspect to it, but there's also the risk evaluation, right? How do you actually evaluate the risk of a new technology, which may not be well proven? So we have a lot of ways to do that, right?
Okay.
So the approach we take is we don't fall too much in love with one side or the other. What tends to happen is with a lot of investors who may get burned in this space is that they're working with people who, let's say, really love the science, right? Or maybe they really love just the potential returns, and you can't look at either in isolation. You have to achieve the right balance between the two. And that's in our experience, that's been the that hitting that right balance and having the right combination of skills on the team, who can help manage and understand those risks, is really what gives you that alpha, right? Without the corresponding downside.
Right. Makes sense. Okay. And if somebody wants to connect with you on a deal that they're working on, what do you prefer? LinkedIn, email, phone, in terms of getting a hold of you?
Sure. So email is always good. We so our team email is .com. So EV for electric vehicles at .com. And so that's the best way that comes into the funnel. Our team evaluates the initial set of opportunities, and then we reach out very quickly. We're very responsive. So that's happened quite a lot just over the last couple of weeks. We've had a lot of inbound emails, even from your webinars.
Sure.
And that's been great. And I've engaged with at least half a dozen people so far on those, which has led to some very interesting opportunities. So,
sure.
Yep.
Great. Awesome. Yeah, well, I appreciate you spending the time here, and maybe we'll see you on one of our panels or something here over the next couple months. So stay healthy, and thanks for your time.
Definitely. Thank you, Richard.
Take care, Samir.